2021, the year of the bull. Let's open those gates and let that bull rip. 1, we get the vaccine. 2, growth's coming from an incredibly low base. So that's great. But importantly, policy response. The Fed, average inflation targeting, not going to raise rates in 2021. Perhaps the market gets a little bit nervous. Yield curve goes up just a little bit. Good for banks. And of course, the tax man. He may come for the high-tech sector, but he can't come for the broad base of the economy because the economy is not strong enough. So perhaps it's possible that the Dow Jones outperforms the S&P in 2021. It's incredibly unusual for a strategist like myself to be bullish. And the reason is we are generally bearish because that's the best strategy. Why? Well, if obviously the economy goes down and markets go down, you come to us for advice. We're incredibly busy. And if things do fantastically well, you're making so much money you didn't care that we were wrong. So I've taken an unusual position. But as you know, there are 3 kinds of strategists, those that can count and those that can't count. So what is average inflation targeting and how may that affect the dollar? Well, average inflation targeting is basically there's lots of excess capacity in the economy. So you let the economy do quite well. Even if inflation goes over 2%, you kind of aggregate it with the years before and you say, well, inflation is still quite low. Unlike the ECB in 2011 that raises rates twice after the financial crisis because it looks under the bed and it sees inflation hiding there. No, you let the economy go. But then what does this mean for the dollar? Because what we're essentially saying is that other countries may raise interest rates and the US won't. So on the old way of thinking of interest rate differentials, this will work against the dollar. Other countries raising rates, US rates are lower, their currencies rise. No, no, no. What you want is growth. You want the economy to go. You want to buy returns. You want to buy growth. You want to buy correct policies. Forget about that idea of interest rate differentials in this environment. Here comes the conundrum. So the dollar probably will do very well against the G10, the majors. But what about emerging markets? If we've got a broadening out of the industrial base, commodity prices could do quite well. The Fed's not raising rates. The US economy is rocking. And so EM should do quite well in this environment. Now, add to that the idea that the US administration will be more of an inclusive administration. Then there are certain countries that could do particularly well. Some emerging markets, I think, have been irreparably damaged by this crisis in their budgetary situations. But in general, many of them could do very well in 2021. So in conclusion, 2021 could be a great year. We're coming from a low base. It's unlikely the Fed will raise rates. The tax man, it's a bit early for him to come for you. So I think the US economy should do very well. The dollar should hold out against the majors. But some of the EMs could do very well. Obviously, the well-known Asian EMs and the dark horses are obviously Mexico and Brazil, which I quite like. But I know 2020 has been a torrid year. But let me tell you something. 2021, this bull's got horns.